What's going on, traders? This is Taylor Horton. I'm the Vice President of Directional Option Strategies over here at Simpler. And today we're going to talk about the squeeze indicator and just overall the power of the squeeze. So I have a huge love of the squeeze setup, and it's a focus on the setup that allowed me to ultimately become a full-time trader. So for those of y'all listening in, I am a really firm believer you can build a career around this one setup. And the squeeze is pretty versatile. You can use it for swing trades. You can use it for day trades, intraday kind of stuff. But I do believe a focus on this kind of setup, because it's high probability in nature, you can build a career around that. So we'll talk a little bit about the indicator, ways that I like to trade the squeeze, a few important details. But with all that being said, let's get jumping right on in. So with the squeeze, the goal here is to find meaningful moves. So more often than not, stocks really aren't doing all that much, anything meaningful. It's more so just this kind of back and forth grind. And trying to make headway inside of that chop is a pretty difficult endeavor. So the power of the squeeze is that it can help us identify those moments in time when the stock is basically doing nothing, but it's doing nothing to the extent that it's building up energy. In the buildup of energy, it's gearing up for a potentially meaningful move. Or, in the options market, what would be known as a bigger than expected move. So, this kind of choppiness, that's tough to trade. That kind of move that Google most recently made, that directional move to the upside, we can work with that. Something like an Amazon here. This is tough price action to trade. The move that follows that price action, that's something we want to look to catch. So there's a couple of examples here recently. The QQQ, the back and forth chop, ultimately can lead to a pretty powerful move. So that's the power of the squeeze indicator. Not only does it help us identify that potential moment in time when a stock is doing nothing, but doing nothing to the extent that it's building up energy, getting ready for a meaningful move. So we can identify those moments in time when a stock is getting ready for a meaningful move, and then we can get positioned to take advantage of the meaningful move. And I want to give you a sense of what I mean by, meaningless price action. So if you look at Google here, you're going to want to throw up the Keltner channels. So throw the Keltner channels on your chart. I'll give you a quick look here at the settings of the Keltner channels. But average true range, ATR, it's a really important concept to understand. And really in plain English, all the ATR is the average the average move a stock is making over the last 14 days or so. So with the Keltner channels, if we change the factor to 1, what the Keltner channels are going to do is measure one average true range move, or the stock's average move, above the 21 EMA and below the 21 EMA. So if you look at Google here inside the squeeze, and we'll jump into the indicator in a second, but this is basically what a squeeze is going to look like. It's a huge consolidation. It's a bunch of back and forth, and really all the stock is doing is moving between +1 and -1 ATR. Now the power of the squeeze, because this is difficult price action. I mean, if you're a day trader, you can make it work, but for the swing traders out there, this isn't the kind of stuff we're looking for. So what we're trying to do is make your life easier, and the squeeze can definitely do that. So if we now change the Keltner channels to, say, 3 ATR, above and below the 21, 3 average true range moves, a 2 to 3 plus ATR move to the upside off of that 21 EMA, that's meaningful stuff. So this is the consolidation phase. It's the buildup of energy phase. The squeeze indicator can help us identify that moment in time. We want to aim to build our position inside that consolidation near the 21 period moving average. And now here's the power of the squeeze. Once all that energy that's been getting built up inside the consolidation begins to get released towards the upside, well, there's the moment in time where we got a meaningful move taking place. And unlike what's taking place here during the energy buildup phase, once we release that energy, that's when you can get those 2 to 3 plus ATR moves. So you go look at the other examples, like in Amazon. All we're doing is going basically +1, -1 ATR, but the squeeze indicator helps us identify that moment in time. It gives us a heads up of potentially which way that energy is going to get released. And then ultimately, once that sweet squeeze fires, there's a 2 to 3 plus ATR move. NVIDIA is another good example. Whole bunch of nothing, whole bunch of choppiness, doesn't look like much, but with the squeeze, we can identify this as, hey, NVIDIA is not doing much here, but it's taking a breather and it's really gearing up to potentially make a meaningful move. So, using the squeeze and a few other indicators we'll cover, that's the moment in time we're trying to identify, and the goal is to build our positions near the 21 EMA, catch the release of energy, and then take our profits into that 2 to 3 plus ATR extension, and then you wait for the next squeeze to set up. And before I get jumping into the basics of the indicator and how to use it, This is really important. So the squeeze is going to help you find those really good looking setups where you can, really catch those strong 2 to 3 plus ATR moves. The real, the benefit of a focus on the squeeze is when you can find the squeeze in the overall market. So as goes the market, goes vast majority of the stocks on your focus list, meaning when the market is setting up in a squeeze, just like the S&P 500 was back here, and then the market's gearing up for a 2 to 3 plus ATR move, is a swing trader, this is when we aim to get most aggressive. When the basket itself, the market itself, is going through that moment in time where it's building up energy, getting ready for the 2 to 3 plus ATR move, because as it fires that squeeze and makes that move, it's bringing everything with it. So the reality is, the NVIDIA daily squeeze worked really well because it was a good looking setup, but it also had the power or, the wind at its back from the overall market. It's the same thing here for Amazon. Same thing here for Google. Same thing there for Facebook. The list goes on and on. But, when you focus on the squeeze, not just the setups you're going to trade, but as far as trying to get a sense of the market and the next potential move for the market, the squeeze certainly comes in handy there as well. So, the most, recent meaningful move for tech stocks, the Amazons, the Facebooks, the Apples, that meaningful move took place when the QQQ here was in its own daily squeeze, firing the squeeze, making a 2 to 3 ATR push. This is where we build our positions. In the push into the 2 to 3 ATRs, that's where we're taking our profits. Then you sit back and you wait for another squeeze. And you take a look here, here comes a brand new daily squeeze. So let's get jumping into the indicators. A couple of things to cover here as far as the histogram, the dots, all these colors. Let's get diving in. So with the indicator itself down here, the first thing I should mention is I'm using the pro version of the squeeze. So on Thinkorswim, and I do think a few other platforms, there is a free version, the original TTM squeeze. So you can find that under John Carter's studies. If you're interested in the Squeeze Pro, which is what we're going to cover here today, I'm sure we're going to have a link in the description of the video, but you can also check it out in the simpler store. The first thing we're going to cover here is the dots. So once you get your squeeze indicator thrown on the charts here, in terms of being able to identify whether or not a stock is in a squeeze and also, whether a squeeze is fired, you're going to focus on the old dots here. So a couple of notes for you. If you look at the histogram right here, and let's get Google up. Google is just such a good example and a good trade. All right, but if we take a look here, move these notes over. So looking at the dots down here, you're going to see a couple different colored dots down on the squeeze indicator. So the black dots, it's a low compression squeeze. And in plain English, the higher the compression, the more energy is getting built up. Potentially, the bigger the move that can lead to. At least that's the way that I look at it. So the black dots on the squeeze indicator, let's see if we can find a couple here for Google. Because Google was a tight compression squeeze. There you go. There's one right there. So the black dots, that's going to be your low compression squeeze. The red dots, that's a mid compression squeeze. And then the orange dots, in this most recent daily squeeze in Amazon, you had a couple of orange dots in there. That's a high compression. It's the biggest buildup of energy you're going to get. It's as tight as a squeeze can possibly get. So when you're looking at the histogram, those are three colors you're going to see, or potentially you're going to see the green dots. What the green dots mean is that the squeeze is fired. So pretty simple stuff here. You're going through your charts. You got a daily chart here for Google. If you see black, red, or orange dots, that's telling you that, for that given time frame, so for the daily chart, old Google here is in a squeeze. Ultimately, is those dots fired to green? That just simply means that the squeeze is fired, or in other words, the energy that was getting built up, in this case, inside the high compression squeeze, once you get a green dot here, it means the squeeze is fired. So we'll look at a few examples, right? Go back to NVIDIA. So for NVIDIA, you had a black dot squeeze. At one point, it did get tight enough to turn to a medium compression with the red dots. But really, you're looking for the squeeze. Now, you can use the different levels of compression to gauge, position sizes or, potentially the size of the move. Personally, I do keep it a little bit simple. If it's got a black dot, I'm probably going to take it. If it's got a red dot, a little bit better. If it's an orange dot squeeze, which is a little bit more uncommon, then it's really something solid. But you find the black dots in this case and the red dots in the NVIDIA squeeze, and then as those dots flip over to green, the energy that was getting built up, now that energy is getting released. And remember, once the energy gets released, what are we looking for? A 2 to 3 plus ATR average true range move to the upside. So there's a few more here. Check out a PayPal. So for PayPal, you had the daily squeeze back here earlier in the month. Got your black dots, you got your red dots. So it's flipping back and forth between low compression and mid compression. but then ultimately the squeeze fires. And here's what PayPal did. We can kind of take this from beginning to end. We use a squeeze indicator to identify that moment in time where we're chopping, but we're building up some significant energy. So you got your black dots, you got your red dots. All right, so we're going through the energy building phase. Once those dots turn to green, we know the energy is now being released, and our profit target is going to be that 2 to 3 plus ATR extension. There's going to be plenty of times, believe me, when a stock is going to keep on going. So you'll find your squeeze, you'll take your position at the 21, squeeze fires, energy gets released, you take profits at that 2 to 3 ATR extension. There's going to be a lot of times the stock keeps on going, but the power of the squeeze and the power of trading it with this mindset is you're taking a high probability approach to your swing trading. The probability starts with just to focus on the squeeze setup, because that can lead to a meaningful move. More often than not, at the 2 to 3 plus extension, that's when the stock is going to start to lose a little bit of momentum. And usually at that point, the squeeze is over. And then ultimately, you get a new squeeze around the corner. So there's one part of the histogram, or the squeeze indicator. The second thing here is going to be the momentum bars. So, with the histogram, let's push this up a little bit. Anything above 0 is a positive reading. Anything under 0 is a negative reading. Now with the different colors here, let's get the Bollinger Bands back up. And this kind of ties everything together. So you use the dots to figure out whether or not a stock is in a squeeze, which form of compression is it, and ultimately to get a heads up of when the energy is getting released in the squeeze fires. But the bars here, that's going to be our momentum reading. So let's pull this up on Google. So when the histogram is positive, you're going to have two different colors here. You're going to have light blue bars, and then ultimately you're going to get the dark blue bars. The light blue bars, that's your bullish momentum. That's your energy getting released to the upside. So we go through the buildup of energy phase. The light blue bars here, along with the green dots, that tells us that the squeeze is releasing the energy, and it's bullish energy. It's bullish momentum. What you're going to notice next is that typically after we make that 2 to 3 plus ATR move, the light blue bars there on the histogram, though the histogram is still positive, they begin to flip over to dark blue. And in plain English, what's happening here is that you're losing your bullish momentum. Rather, it's an exhaustion of that momentum. So you got a full gas tank here at the 21. You release all that energy, the gas tank is running a little bit dry. And more often than not, once the stock goes through that exhaustion phase, the easy move is over. And so you can see Google continues to grind higher here, but note the difference in catching that move versus trying to catch this slow grind. So this should tie everything together for a bullish trade. You utilize the dots here to identify when the stock is going through the buildup of energy phase. Once the dots are green, it's telling you that energy is getting released. And if you have the light blue bars on the histogram, obviously that momentum and that energy is getting released to the upside. Once we're getting towards 2 to 3 plus ATR, keep an eye out for exhaustion. Usually that's where we're going to go through that phase where all the energy getting released is coming to an end. And usually, now you look at the cues, and I think this is a good example, of kind of the natural cycle here. We go through the buildup of energy phase, the energy gets released, we hit 2 to 3 plus ATR, you then go through the exhaustion phase. So essentially that easy move is over, and as you go through the exhaustion phase, you come back to the 21 EMA, and typically a brand new daily squeeze is starting. So we can see squeeze fires to the upside, squeeze is losing momentum, that move is over, and now here's a brand new squeeze. And on the flip side of things, when the histogram is negative, that's just a sign of bearish momentum. So here's a daily squeeze. We're building up energy, but in this instance, once you get the green dots here and the red bars, the energy we're building up is getting released to the downside. So the momentum is to the downside. It's the same discussion here. Usually what you're going to get is you build up energy, the energy gets released to the downside. So the green dots are telling us the squeeze is fired, negative histogram, path of least resistance is to the downside, and usually you're going to get that 2 to 3 plus ATR move. Then you go through the exhaustion of the bearish momentum. So now the gas tank full of bearish momentum is getting a little bit dry here. If you're looking to short the market, there's the easy money move. You go through the exhaustion phase, the move is typically done and over with. And just like we did over here, you go through the exhaustion phase, you come back to the 21, you go through the exhaustion phase, you come back to the 21, and then a new squeeze comes in. So we go into a new squeeze. The red dots tell us, hey, here's a high compression squeeze. We have light blue positive bars on the histogram. So we're building up bullish momentum. Squeeze fires, 2 to 3 plus ATR move. Here comes the exhaustion. The easy money move is over with. Back to home base at the 21. Here comes a brand new squeeze. And then you look to do it all over again. So I just want to go through a few more examples, really kind of drive everything home here. All right, so here is SQ. We can see we're right near the 21 EMA, so there's the buy zone. There's the squeeze, get the black dots. Squeeze begins to fire, so got your green dots going off. You can see the light blue bars coming in, so we got positive momentum getting released. We hit the 2 plus ATR extension, and then we go through the exhaustion phase. Back to the 21 EMA we go. Here's a brand new daily squeeze. So we build our positions here. We take our profits into the strength at that extension. Typically, hey, if it keeps on going without you, so be it. You caught the high probability move. But more often than not, exhaustion phase comes in. We're back to the 21. And now we're going to monitor another daily squeeze for the next potential move. So there is SQ. Let me think of a couple of here. Right, we looked at NVIDIA. We looked at PayPal. What else can we take a look at here? SQ was a good one. How about even Tesla? I'm sure we got a lot of Tesla fans out here. Whole bunch of nothing. But we start to hold over the buy zone. You can see we're in a squeeze here. The histogram is already positive, so we're building up bullish momentum. There goes the 2 to 3 plus ATR move off the 21. Now, it was a quick and it was a short-lived move, but the point I'm trying to drive home here is with the utilization of this indicator, this is what you can identify. You can run scans of the squeeze, but you can identify when a stock is going through that buildup of energy phase. I'll talk a little bit here in a second about, my entry criteria, but in a nutshell, identify the buildup of energy, build a position on top of the 21, take profits into strength at the 2 to 3 plus ATR extension, and then you move on with life. You move on to the next good looking setup, and here's Tesla again. Brand new daily squeeze, and maybe a week or so from now, we're in a position to catch another 2 to 3 plus ATR move. So, a trade I took here today, and it's a good example of a squeeze, is going to be Target. Right? If you're anything like me, your significant other probably goes to Target quite often. But Target here, so today I sold today is Monday the 3rd, so I sold a May 21st expiration 200 strike put credit spread. Not because I'm a fan of Target, not because I like working there, it's because Target has that high probability moment in time. So that's the beauty of the squeeze. We, to an extent, we don't so much care what the stock is, as long as it's in a good uptrend. And clearly, Target's in a good uptrend, and as long as it's setting up in that moment in time, when it's building up significant energy, getting ready for a meaningful move, that's the kind of setup I think you want to trade every single time it's presented. So long as you're in a good market environment. So Target here, it's a good example of a squeeze. All right, we check out the histogram. You had your black dots. So low compression. You did have a red dot, so mid compression. You even had a day here of high compression, but the dots are telling us that Target is in a squeeze, and though it hasn't quite fired yet, notice how the histogram is turning positive. This is telling you that, how can I explain this? When the histogram is turning light blue, keep in mind, this is a big game of supply and demand. The way that I look at it is once the histogram starts to turn light blue, there's way more accumulation taking place than distribution. Or in other words, the powers that be, the big money, they're buying some Target here. And that's a huge component of it. The squeeze helps us identify when we're building up energy and when we could get ready for a directional move, the histogram is going to tie things together. If Target was in a daily squeeze here, but the histogram is red, what does that tell us? It tells us that there's not too much accumulation taking place. Histogram turning negative, momentum's turning negative. There's more distribution. There's more selling. And if you're looking to play Target to the upside and you don't have that positive reading on the histogram, you might be the only one thinking about going long Target. So the histogram ties everything together. But as far as my, pre-fight checklist, all squeezes aren't equal. A squeeze on its own is a good start. But to really stack the odds and put the probabilities in your favor of catching, again, 2 to 3 plus ATR move to the upside, the first thing I'm going to look for is the overall trend. So more often than not, the path of least resistance is going to be in the direction of the prevailing trend. So if you look at Target here, here's actually a really good example. Daily squeeze, squeeze fires long. Daily squeeze, squeeze fires long. Daily squeeze, it fires long. Daily squeeze, it fires long. Daily squeeze fires long. Here's a new one. You got a good uptrend and you got a good rhythm to it. So if you take a look at, say, Snow. Now, Snow has a daily squeeze here. My gripe with Snow is that you're not in a solid uptrend. As the market continues to grind higher, making new highs seemingly every week, old Snowball over here is getting completely ignored. It's like the stepchild of the market. So we're thinking in terms of probabilities. The squeeze is that high probability moment in time when you're gearing up for a directional move, but I'm a believer that catching that directional move in your favor is so much easier when you've got a clear uptrend. So Google's a good example. Daily squeeze, it fires long. Daily squeeze fires long. In this most recent move, daily squeeze fires in the direction of the overall trend. So with Target, to me, that's the first thing that makes it a viable candidate. You got a solid uptrend. So we'll see if that path of least resistance continues to be to the upside. The other thing I'm going to look for is I'm going to take a bullish trade. So if I identify a squeeze and I'm under the thought process, that energy is going to get released in the form of a 2 to 3 ATR move to the upside. At the very least, I don't want any negative momentum on my histogram. So if there's red bars in the histogram and we have negative momentum, I'm not looking to go long the stock. Remember, supply and demand here, I need accumulation taking place inside the consolidation for ultimately the stock to fire long. So that's the first thing I'm going to look at. If we got a squeeze, at the very least, do we have yellow or light blue or even dark blue bars? I'm okay with yellow bars if it's a clean squeeze, because that's kind of the first step to the stock getting ready to move higher. You got to rid yourself of the negative momentum, and once a histogram turns yellow, we're at least going through the exhaustion phase. So even then, typically I'll wait a little bit, but I can work with that. Ideally though, you're looking at a positive histogram. So I'm taking my entry here in Target today because not only do we have a good uptrend, we're in that moment in time where we're building up enough energy, there could be a bigger than expected move around the corner. Because of this, trend here, the structure of it, I'm led to believe the squeeze probably fires in the direction of that overall trend. With the positive histogram, I'm a little bit more confident of that. And then the other detail that's important here is I'm going to take my entries only when the stock is really close to the 21 EMA. So, look at Google right now. I mean, Google's not in a squeeze, but the whole discussion we've had here about the move that we want to catch, getting long at the 21 and taking profits at that 2 to 3 plus ATR extension, even though Google continues to grind higher here, for me, it's too extended. It's not at that buy zone. So the move that I want to catch over and over again as a swing trader is the squeeze at the 21, taking my profits into that push. So this is a move in Google we did in the options room, getting long at the 21. We're taking profits at the extension. We were doing some Amazon. Same thing, daily squeeze. Mind you, the whole market was squeezing here, but we're getting long at the 21, positive histogram. We're taking profits at the extension. We did the same thing on Tesla. Getting long at the 21, taking profits at extension. And believe me, there's going to be losing trades even with the squeeze. APPS here, I'm going to take this setup 100 times out of 100. Because we're in a tight squeeze, got the red compression, so mid-compression squeeze, we're above the 21, positive histogram. This one just failed on us. But the thought process here is that if you can be picky, and you can find a stock in a really solid uptrend, and then you can find the moment in time when it's gearing up, catching its breath, getting ready for a meaningful move, don't concern yourself with the results of every individual trade. Rather have a mindset where, hey, if I take 100 trades in a row that have this kind of structure, where I'm building my position in that high probability moment in time, you take 100 trades like that in a row, you're going to come out on top. So I'm looking for all those things to come together. A good looking uptrend, obviously, you need the overall market behind you as well. So like we talked about, our trades in NVIDIA, our trades in Amazon and Tesla, etc., and Google, they're good looking setups. So all on their own, they had a lot going for them, but it was the squeezes in the market recently that basically sent everything higher. I mean, Target as well. Target is squeezing back here. The market is squeezing back here. The market fires a squeeze long. There goes Target. So I'm looking for that good looking uptrend. I'm looking for the squeeze, obviously, because there's that high probability moment in time. And the analogy that I use is the 21 EMA is a launching pad. So I'm going to take you back to Google just one more time here. I'm looking for that squeeze, and I'm looking for that stock to take a lift off and make that really solid move. So if we're going to take liftoff and the 21 EMA as a launching pad, that ain't going to happen if we're way underneath it. And if we're way above the 21, I already missed the move I'm looking for. So for me, it's a really kind of easy rinse and repeat process. I wait for this moment in time, squeeze is setting up. I wait for a positive histogram, ideally, at least not negative momentum. I wait for the stock to have a couple solid closes above the launching pad, above the buy zone, and then I build my position, which typically for me is going to be an at the money or a slightly out the money put credit spread. So that was a weapon of choice for the Google trade, the Amazon, the NVDA, the Tesla. But I'm looking to rinse and repeat that setup on basically every single trade. So the reason I'm taking Target again isn't because I'm a Target fan, though I am, but it's because of the structure of the setup. Really good looking uptrend. We're going through the buildup of energy phase. We're above the launching pad. Here comes some positive momentum on the histogram. I'm going to take this trade 100 times out of 100. I'm not going to concern myself with the individual results. It's just the confidence that at the end of 100 trades, if I'm going to be that strict and my structures are going to have that high probability nature to them, I'm going to come out on top after 100 trades like that. Now, one common question I do get is when you look at Google, and by the time the daily squeeze fires, meaning, you finally have triggered the release of energy, it's already made its meaningful move. So personally, I do not wait until the daily squeeze fires to take my position. Ideally, I've already got my position, I'm worked up to my full size, and I'm taking profits into the squeeze firing. So, what I like to do, and this just shows you the power of the squeeze. Mind you, I'm looking at Amazon right now. It's not because I'm an Amazon fan, it's because on a weekly chart, here's that high probability moment in time. So for a 30 to 60 day swing trade, I like a weekly squeeze. Positive histogram, tight compression. It's got that structure to it. So, all right. So with Google here, the question is, if I'm not going to, if I'm going to wait until the daily squeeze fires, I might have missed the easy money move. So, how can we get in there a little bit sooner so we can take advantage of that? With the mindset that the 21 EMA is the buy zone. That's your launching pad. And when the daily chart has that squeeze with a good looking histogram, etc., here's what we can do. We'll line up on the chart that 21 EMA, and to make it a little easier visually here, so here's your daily squeeze. A lot of times what is going to finally trigger the release of that energy is actually lower time frame squeezes firing. So my favorite setups is when you have a daily squeeze, but inside of that daily squeeze, there's a squeeze on the 4-hour time frame. And inside of that squeeze on the 4-hour time frame, there's one on the 2-hour, there's one on the 1-hour, there's one on the 30-minute. What can happen is when you have the good-looking daily structure, where you're in a strong uptrend, you got a bullish structure to your daily squeeze. If you can find nested, so to say, inside the daily squeeze, lower time frame squeezes, what can happen is the domino effect. Where a 30-minute squeeze fires long, that releases enough energy to fire a 1-hour squeeze. Then the 2-hour, then the 4-hour, ultimately the daily here. So if we want to get a little bit, of an earlier entry, get positioned for that bigger picture daily squeeze, on top of that daily 21 EMA, hunt for lower time frame squeezes. So if we zoom in here a bit, what really got Google waking up a bit was this 30-minute squeeze. It's right on top of your daily buy zone. It's a high compression squeeze. Once you get the green dots in the squeeze fired, Google starts to wake up a little bit. It woke up enough to not only trigger that 30-minute squeeze, but at the same time, right on top of that 21 EMA, right on the launching pad, that led to a 1-hour squeeze firing long, which we can see the squeeze right there. So the 1-hour fires long. That's enough energy getting released for this 2-hour squeeze. Hold on a second. Here you go. 30-minute squeeze fires long. 1-hour squeeze fires long. That's enough to make this 2-hour squeeze fire long. And then you got the big whopper here, the 4-hour squeeze. Once the 4-hour squeeze gets triggered, a lot of times, you're releasing enough energy under the surface inside your daily squeeze, right on top of your buy zone, to finally get the daily squeeze going. So that's what I like to do, is it all starts for me usually with the daily chart. And hey, if you got a weekly squeeze, now we're really talking. But at the very least, I'm going to find that daily chart. It's got to be in a good solid uptrend. So I don't want a snow. I don't want a pins right now. I don't want a P-ton or a PLTR. I don't want any of that. I want something like a Google, an NVDA, a Target, an Amazon, something in a really clear uptrend. Once I'm working with that and I find that daily squeeze, just using the indicator, I'm looking for the lower time frame squeezes right on top of that daily 21 EMA. And if you got a 30, you got a 1 hour, a 2 hour, whatever you might have, you can certainly use that lower time frame squeeze as your gauge of building an entry. So to get in here a little bit earlier, because we don't want to be getting long right here. We missed too much of the easy move. So perhaps you dial it down to a 4 hour squeeze, and with the understanding of, the context of the daily chart, the trend, the squeeze, you look for that bullish structure to the 4 hour chart. You make sure you got a positive histogram. You make sure you're holding above the launching pad. You build your position inside of that consolidation. Then you're in a good position, because once that squeeze fires, not always, of course, but often enough, if it's a good enough daily squeeze, and you had the high compression here. So, this is really tight stuff. 30-minute fires, 1 hour fires, 2 hour fires, 4 hour fires. There's enough happening under the surface here to get the squeeze going. So with Target, I ran my scan this morning. Daily squeeze for Target comes up, and I'm going to go through my pre-flight checklist really quick. Are we in a solid uptrend? You bet. We got a positive histogram. It's taken form here today. Are we above the launching pad? Admittedly, a little bit too far above the launching pad. I would like it a little bit closer. But if I'm trying to get a sense of, is there anything happening here to trigger the release of energy from the daily squeeze? Let me check out those lower time frames. And this is what really got me interested in Target, is not only is that daily squeeze queuing up here, really getting ready for something, potentially, you got a 4 hour squeeze under the surface, already going through the release of energy. What triggered that 4 hour squeeze was this 2 hour squeeze here, so on and so on. So, my job as a full-time trader, first and foremost, it starts with trying to be in rhythm with the market. So I really can't stress enough. You find a squeeze like this in the indexes, go find a good-looking squeeze in something else, because now you got the moment in time where you might have the wind at your back. So my job as a trader, it really starts with being in rhythm with the overall market, looking to build my positions when the market itself is going through that buildup of energy phase, or is squeezing, and then I'm looking to take my profits on my trades once the market and the stock itself release the energy. And they make the 2 to 3 ATR push. And then you patiently wait for the stock market to go into another squeeze. You build positions at the buy zone. It's a good, easy rinse and repeat process. So that's the first part of my job, is just being in rhythm with the overall market. But then it's just a matter of focusing on squeezes. Quite literally, 95% of my trades, they're squeezes. It might be a 30 to 60 day swing trade based on a weekly chart. So a good example of that is Amazon. For Amazon, I might do a 30 to 60 day put credit spread. For that daily squeeze back there in Google, I might do a 15 to 30 day put credit spread. If I want to find a day trade, well, I'm going to go look for an 30-minute, an hourly, a 2 hour squeeze in the stock in a bullish trend. But quite literally, it's all I focus on. I'll do the iron condors, I'll do the weekly income trades, but at the end of the year when I look at my results, what really moves the account forward is a focus on these kinds of structures. A stock in an uptrend, identifying that moment in time with the squeeze, where we're getting ready for potentially a meaningful move, and my job is to get myself positioned to catch the meaningful move. And I take my profits at the ATR extension, and then I wait for the next one. So believe me, I could go all day about the squeeze. There's, so many more details we could jump into, but to make things simple, I want to touch on the very basics here. The power of the squeeze, why it's meaningful, why you can build a career around it. And remember, it's because it leads to meaningful moves. Trading is all about probabilities. Instead of throwing crap at the wall, you wait for that moment in time. You're already putting yourself in a much better position than the vast majority of traders. Vast majority of traders, they're going to lose their shirt inside all this chop here. With the squeeze, you're going to identify this for what it is. It's a whole bunch of noise, but it's a buildup of energy that can lead to a move you can build a career around. So hopefully this all makes sense. Hopefully it motivates you to start focusing on the squeeze, because I promise you, my trading took a turn for the best when I made a commitment to focusing solely on the mastery of this setup, which is a process that continues to this day. But I hope you enjoyed the video. If you haven't already, please subscribe to our channel. Check us out at simplertrading.com, and I look forward to talking to you in future videos.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.